Welcome back to Power Lunch, and take a look at yields. The yield on the 20-year bond is higher, now at about a couple-year high, 5.11 after the 1 p.m. auction that pushed yields up on the long end across the board, really. Let's turn to Rick Santelli for more with the bond report, joining us out of Chicago. Rick, stocks were certainly not happy about this one.
No, and I can understand that. Before we get to my charts, I've been getting tweets all morning and afternoon. Is this a Liz Truss moment in the markets? It feels like it. And my answer to that is really, really easy. The 10-year, where do you think the 10-year closed at the end of last year, Kelly? I'll tell you, 457. Where is it now? 458. I would think a Liz Truss moment would be worth more than 1 basis point personally. Does that mean it's not important? Of course not. Does that mean I'm not tickled that we're finally paying attention to debt? Yes, hooray. Let's start at the beginning now. Let's look at a chart of 20-year bonds and 30-year bonds U.S. because right now, both of them are above levels from January of this year that we were comping to, and we zoomed all the way back to around November 1st of 2023. So that level for the 30-year would be just a whisker under 5%. That level for the 20-year is around 506, and as you pointed out, we're well above that. Now, many are paying extra attention to the 30-year bond, and that's all great. But, you know, back when I started trading bonds in the early 80s, the 30-year was the king of the curve. That's not true anymore. It's the 10s. But the 30-year is now gaining distance. Look at the knob spread. This is the 30-year yield minus the 10-year yield. And you could see that we are virtually at the highest levels going back to 2021. That's important because I expect term premium and these spreads between the maturities to keep widening. But don't lose perspective on which maturities are the most important at this point in time. Everybody was looking at the close today with the 30-year Japanese government bond. It closed at 313. They first had an issuance of this bond in September of 1999, which that chart goes back to. You see what it looks like? Of course, we have blown through all the yields. We're higher than ever before. Now, let's keep that date, SEP of 1999, and look at the dollar-yen based on the interest rate differential for foreign exchange. And notice, we're at 143 and change. Notice how 140's been a bottom for years. And notice how historically it's a very lofty level for the dollar still. And that's important to keep in mind. Take a macro view when everybody's hair's on fire. Kelly, back to you.
Rick trying to calm everybody down. Just, I'll get used to it at some point. Rick, thank you very much.